Hi, and welcome back to my channel. I hope you guys are gaining value on the topics that are being dropped on the channel. So, today's topic is how to mark key levels using ICT concepts. Now, I know many of you that have heard of retail trading, SMC, and ICT. Retail trading, we have the way they mark their key levels and the trend line and everything. Indirectly, I always say that it's kind of related with also for ICT, but I want to show you guys how we mark these key levels that are very important. You can use it as a form of confidence for your entry, and you can use it as a form of confidence for your take profit, which made me to get do a 1 to 8 hour this morning, this afternoon, sorry, morning/afternoon on gold. Now take note, your monthly is going to be the black line, your weekly is going to be blue line, your daily is going to be the red line, and your 4 hours is going to be the orange line. Now we're going to start from 1 month. Now all we know is that we have two ways candle is being formed. Firstly, we have this candle. I'm going to start with what? I'm going to start with a bearish candle. Okay, let me draw this well. I'm going to start with a bearish candle. It's not staying in the middle. Well, let me manage this like this. So I'm going to start with this bearish candle for you, which is red, which you all know a bearish candle is red, right? A bearish candle is red. Firstly, the up here is what? The high. The middle here is the opening of the candle. The middle here is the closing of the candle. I'm going to label it one by one. And here is the low of a candle, right? Now it can go a long way for you. I'm going to label it. This is the high. I'm going to label it in a way that you understand. It's very something very straightforward. Clone. This is the opening of a bearish candle. Okay, clone. This is what the closing of a bearish candle. We all know that. Okay, and what do we have here? We're going to clone it, right? This is also the low of the bearish candle. This for a bearish candle. Now, for a bullish candle is always opposite. It's entirely opposite of a bearish candle. Now, this is the way a bullish candle is. A bullish candle is always blue in color. And what do we have here? I'm going to put in a line. Bear with my drawing. It might be very, very funny, but bear with my drawing. Now, on a bullish candle, what do we have here below? We have what? We have the high here. Let me draw the line to make it very explanatory for you. We have the high here, and we have what? We have our opening price here, and we have what? We have our closing price here, and we have what here? We have our low, which is going to be labeled for you to understand. Now, okay, this is for you to understand it very well. It's something that's very straightforward. Now, we all now know how an open and a close of a candle is. This for those that are swing traders like me. I'm a swing trader, and it might go a long way for you if you understand how this works effectively well. Now, we know how a candle is being formed, opening and the close of a candle for a bearish momentum and for a bullish momentum. Now, when you come into your chart, what is the first thing you do? Using ICT and based on ICT rule for those that are swing traders, what we do is we always count the 18 candles, 18 to 20 candles. From the current move, you count backward 18 candles, which will stop you around here. Then the next thing you do is we are looking for swing points. We are looking for swing points. Swing points are very important for you when you're trading. Anyhow you're trading, swing points are very important for you. Now, if you look at this environment, we're going to be focusing on this whole area. Oh, sorry about that. I like gray and I like it very transparent. Now we're going to be focusing on all this area here because that's the current move of the monthly, which is showing us that what happened. If you look very well, do not forget my rules that monthly is black candle, right? So I will start first with the body of the monthly candle. This is a swing point, the current swing point, right? And market is showing that market is also what? Bullish momentum, which will take out this high. Can you see that what I'm seeing in the market? Now, if I put in my black line here, I'll change the color to black. And the wick of that black line, I will change it to black, just to be reminding myself that those areas are what are monthly zones. Now, I also see a swing point here. I'll put my black line here. Also, my short black line. Let me not use that one. Let me draw my normal swing point I've been drawing. I can see what a swing point here, and I also put the line on what on the body of the candle, which indicates the opening price and the high of the candle. I'll come down up here again, and I can see a swing point here. I'll put in the black line here, and I'll also put what I also put a black line here. So anytime markets react in that area, very funny, I'm not going to be scared. I'm not going to be scared at all. Now take note, when market is bullish, you are looking for bearish candle, and when market is bearish, you're looking for bullish candle. Example here now, this is a bullish candle. I'll mark here, but before market gets here, it's going to be a very, very long time. But you can see here, bearish candle. If you had marked this swing point here, you will know why there was a reaction in the past. Can you see in the future what happened here? There was a swing point that was created, which made that form to be the high and the low of the candle. But we're focusing on the current move. Now, third analysis showed us that market is going up, right? That's what our top analysis is showing us. Now, if I come around here, what do I see? There's a break of structure here, change of character, showing a bearish momentum. What did I say my weekly color will be? Now I can see that there's a break of structure, but I always advise people to do a top analysis so that their chart does not look rough. It doesn't look rough and messy, right? Now, if you look inside here, don't forget I told you when market is bearish, you look at the bullish candle opening and close price, right? So weekly is what? Blue line. There is a bullish candle here. I put it in the body, and I change it to what? I change it to blue candle, blue, and I come down here and I mark the wick, that's the high of the candle, and I turn it to blue. This will let you know why market is reacting in some zones. You see market acting very funny in some areas. You are feeling very bad. These are points for you to take note of. Now I can see that swing point here being created, right? This is what? This is the wick, right? This is the wick of the candle, which is the high. Don't forget I told you when market is going bullish, you look at it for the bearish candle. When market is going bearish, you look for the bullish candle. And I put my line here also at the body. So we're seeing a monthly zone, monthly high, and we're seeing a weekly body. This environment is going to be very funny for market to react. There's a break of structure here. Market is also going to react here because these are important key levels that market reacts funny. There was also a key level here. If you look at it very well, and can you see there was multiple reaction? Market day shift in market structure here. You see the market structure here. Can you see it? Market shifted structure there. If you had marked the high and the body, you will know why they were funny reaction with a positive order block. Now we know that market is going to target this area for it to act very funny. We know that this is our next take profits. You see how it's very easy now to mark your chart. That's for weekly. Weekly is showing the market is what? Still bullish. Now we are what in daily. In daily, what do I see here? Am I seeing any form? Sorry, am I seeing any form of swing point? Now there's no swing point here, but there's a break of structure here. Now, if I bring my chart down below here, my chart says daily is red line. What do I have here? I have what? I have my high here. Daily, I'm going to use red line, making this whole area a very funny area for market to push up. And what do I have again? I have what? The body, the opening price, which is also a red line, which will give me indication that when market gets here, it's going to pull off. So in this area, I have my monthly key level, I have my daily key level, and I have my weekly key level, which is also a good confluence for me. Now, if I come down to 4 hours time frame, 4 hours time frame, I can decide to counter trade, right? But if you look at it very, very well, just for counter trading, I'm going to just be looking for markets to do a change of character. I'm going to take a massive trade down to this area. But I can also do a continuation trade. And this is what this our high of the 4 hour candle. It might not be such a strong key level, but it's to do a long way, go a long way for just to take note of it. And you change it to orange color just to remind you that these are the sections that you marked, right? And if you're looking for high probability trade, I'll keep marking it a break of structure here. A swing point was created last candle, and I have another key level on 4 hours. You can do this on your personal marking on your chart and send your chart looking sweet and fine. Someone is looking at your chart, though. These are just You can see you're not scared because why? You know what market is about to do. These are key levels. You can see the way market is reacting there, right? Another block. But take note, there was what a shift in market structure. You cannot compare your key levels from those in daily. Let me change this back to black. I'm done marking the key levels already. There's a shift in market structure, which made this what? Which made this a breaker block. Now, if you want to counter trade, I am not afraid. I'm not afraid to wait for the swing point. One, two, three. Put my entry here and stick my stop loss around here. I'm not so scared. I am not afraid if I want to counter trade. These are key levels I'm going to take note of. These are key levels I'm going to take note of. So I'm not afraid of all these levels because I will mark them as my take profit. Now these are key levels I marked what on 4 hours, right? You can target here, you can target here. It will just help you know where your take profit is in case market wants to act funny. Can you see? Key levels. And this is what our monthly key level. And what are you saying? If you are very observant, right, you will notice that markets acting very, very funny in those areas. Markets got to my key level, pushed up, came down, got to the second key level, pushed up, forced its way down, got to my what? What is blue line? Blue line is what? A key level from 1 week. Got there, pulled up back, hit my what? My monthly key level, black line. Let's see what's going to happen again. And what happened is still pulled down again. It's just going to help you to know where to take profits. You can pull this as your form of take profit and you do an amazing trade of what? 1 to 9. And if I go back to my daily, I'm on a key level, which means that market is in an area of what? 1 month. I have so many confluences. One day is what? Red. Blue is what? Blue is weekly, meaning that zone is a very strong key level. And what do I see again? I see what market has shifted structure, creating what? A breaker block for my entry. You can take that mitigation block or you can enter this breaker block. You can do your own entry in form of swing point. You can decide to enter your trade directly from here and target this place as you take your stop loss, target the high up here as your take profits, or you have many options. Actually, you have many options. You can wait for a swing point candle to be created, 1 2 3, and when this breaks up here, you target this low here. And let's see, you target this low here and you target this same high as a take profit, which will give you what? Which will give you a 1 to 9 trade in case it reaches there. You go back to your 1 day, you go back to your 1 day, and you also what? On your 1 day chart, you see the first one you've done 9 to 7, right? 1 to 9, right? And your 1 day, don't forget key levels. When you see swing points, this is a swing point, but I won't mark it a swing point. I don't like the swing points though. But when you see swing points, let those swing points be a form of you to mark. And I'll target my external range liquidity. What a beautiful trade. So I had so many confluences now backing me as a swing trader. Do not quote me as a swing trader. So you have gotten two amazing trades. You have counter trade to a 1 day, and also you have followed the trend, giving you 1 to 9, 1 to 9. You can take a two trade amazingly for the whole month, doing if you approximate 1 to 19 for the whole month, and you're good to go. These are confluences that would let you know where market is going to act very, very funny. Your swing points are very important. It changed my web analysis for these past few weeks, and I decided to share the knowledge outside. I believe that those that are struggling, that work 9 to 5, will find this very useful. Don't forget to subscribe to my channel. I give a shout out to my coach for his amazing work on me. Thank you so much. Hi and welcome back to my channel.